I came so fancy today. Guess what? I got a tiny little presentation. I don't know if that's cheesy or if that's a good thing, but let's just hope that's a good thing. But yeah. Again, just want to make sure if you guys could tell me in main chat. You guys can currently see my screen. When I showed the presentation just a few seconds ago, I just want to confirm that you guys were able to see that. It's nothing too fancy, I swear to you. It's just a little bit easier for you guys to follow along if I have that there, so. Okay, sweet. Alright, so brief introduction since we have a few people on here. A few new people on here. Few new faces on here, sorry, my bad. But my name is Kevin. I go by the username of the Market Bishop on Discord. I've been trading for 9 years now, ever since the age of 12. I'm currently 21. I turned 21 actually on March 19th, so it's not been that long since it turned 9 years. But it's been a long journey. It's also been a hectic journey, especially in the beginning. But it's definitely helped me learn a lot. You know, trading also can help you learn the values when it comes to real life, especially when it comes to, you know, building patience and stuff like that. So, you know, it's just, you could always take examples from one part of your life and implement it onto the other, and that's what trading did for me. Made me better in my studies, actually, as hard as that is to believe. Made me better in studies, in my relationship with my family, almost in everything. So, yeah, I currently, if you guys don't know, all of the trading funds I currently have, whether it be profits, right, or my current balance in my account, which is over 8 figures now, will be all used to actually open up a, I'll be looking to purchase lands in Pennsylvania and Virginia to build and open up animal shelters. And the reason why I'm telling you guys this is because that's a goal, right? So because I have a goal, you'll realize that when you have a goal to trading, you're always going to trade smarter compared to just trading to get rich quick. If you put reason behind stuff, you're always going to act smarter than when there's no reason at all. So before we even start anything, before you start taking trading seriously, one of the biggest recommendations I could say is just find a reason to trading. Like one of my partners on here, Krish, you guys could see him as KP. His whole reason behind trading is to retire his parents, right? And that's a beautiful goal itself. So think about it now. Every time he trades, it's money he's gonna be eventually using to retire his parents. So he's not gonna just dumbly just trade away that money, right? So put a reason behind your trading, and it's all gonna be better after that. But yeah, so that's a little back history to me. I've done pretty well, in my opinion, in the past 9 years. I originally started trading when I was 12. I started with $300. I learned the Wyckoff strategy, or the Wyckoff strategy, I don't know exactly it's said. It's a very, very old trading strategy that's basically built on fundamentals that institutions use to trade. And I don't know if you guys know what institutions are, but basically these are the market makers. Market makers are basically the people who move the market. But if you guys don't mind just muting your mic if you don't have any questions, please. Thank you. But yeah, so why not follow a strategy that the institutions use, right? Since they're the ones who actually move the market, so why not see what they're seeing, right? So that's what the whole Wyckoff strategy is about. It was made by like Richard Wyckoff or something like that. I forgot his first name. It's a very old strategy. It was very hard to learn. It's very, very in-depth, very intricate, very complicated. But I hope to dull that down for you guys, because there's a lot of stuff that's not really relevant in this time period, as you guys can probably guess, since, you know, back then there was less traders compared to now, right? So there's a lot of stuff that's outdated or stuff that's not really necessary. So over the course of months, right, for the server, I hope to bring you guys basically the wick-off strategy and my strategy kind of simplified so you guys can learn at your own pace, right, since most of these are going to go on YouTube and stuff like that. But yeah, so that's what the wick-off strategy is. It's basically a strategy that institutions basically use, right? And it helps us as retail investors, right? Retail investors are people who are traders that are not part of institutions, be able to accurately or close to accurately predict where the market will move based on what the market movers are trying to do, right? Since they're the ones who actually move the market. So yeah, but since I'm done with doing my stupid little rant there, we'll get into the questions right now. Again, so sorry this live was late. I was literally driving the past 2 hours, so this is just the time I got, and then I had to make this very cheesy presentation you guys can see here on my screen. So that took like a good minute. All right, let's see. Oh yeah, I currently do trade options, as you guys most of you know. But I'm going to be looking to send out futures and penny trades out soon, so that's going to be nice. But okay, what's the topic of tonight? It's going to be volume analysis, tied into a little bit of price analysis, since both of those go together. But I'm going to look to also do a live on price analysis as well to give a deeper view into that. But yeah, let's see. What is the best brokerage to trade options on, considering fees and fills? So, in my opinion, there's three. Okay, so it depends what you're trying to do. If you're trying to do long term, then honestly, Robinhood or Webull, right? It does not matter, because Robinhood is a good platform. Just the only reason why Robinhood is a good platform is because of its no commissions. So that's the only thing it has to it, and maybe because it has a simple user interface. But if you're trying to day trade, your fill times, right, like when you buy contract and everything, it matters, right, how quick you get filled. So you definitely want to make sure you have a platform that gives a good fill time. So that's why Robinhood is not good for scalping or day trading at all. But of course, if you're doing long-term trades, right, if you're having a long-term account, then it definitely doesn't matter if you use Robinhood, because fill times are not going to be really that important. So if you're doing long-term or spreads, right, then Robinhood is totally fine. If you're doing day trading, Webull is fine, and Thinkorswim is great, but Thinkorswim is an amazing platform, has amazing charting abilities. As you guys can see here, this is my Thinkorswim platform. This is what I use to trade, right? This is literally what I look at every day while I'm trading during the market open hours. I know it looks complicated, don't worry. But Thinkorswim is good, but it's just the commissions actually really kill you, especially if you have a small account. And then when it comes to scalping, Thinkorswim, if you have a big account, it makes sense, but if you have a small account, for scalping, it literally does not make any sense, because it's just very hard to use. So, in my opinion, the best brokerage you can possibly use at this current time is, is going to be Webull, because Webull, I believe, offers free, no commissions. The weird thing is, I don't know if you guys have noticed this, it kind of seems like there is a thing that says fees whenever you execute trades on Webull. You guys can correct me in the main chat. I'm not sure, since I don't actually use Webull as much, but I've seen like whenever people put up screenshots or stuff like that, or I have a Webull account, so like sometimes I would like do a trade here and then with this small account I have, and like I would see like there would be like fees, like /fees, I don't know. You guys can correct me in the main chat if I'm wrong, but I think there is like fees actually in Webull, but it's very minuscule. I think it's like it's like 2 cents or something like that. But yeah, but in my recommendation, Webull, if you're a beginner, it looks intricate, but you could go on YouTube, find a literal breakdown of the Webull platform on your desktop, and just like have answers to what everything is and learn it in just like 15 minutes. But if you have a bigger account, then Thinkorswim is literally the way to go, because it gives you much more access to tools and stuff like that. So that's basically 2 options. But again, if you're doing growth account, if you're doing spreads, then yeah, so it's that's weird. Yeah, I guess Webull does give just a tiny bit of commissions. If you can't hear me, it definitely is on your laptop, since you guys can hear me. So yeah. All right. Next question. Let's see. Sorry if I'm going through these questions fast. I do obviously want to get to the subject. So, if we're in a demand zone and start to see low volume, does that typically give you some indication that the zone will fail and not hold? Well, okay. Well, there's 2 situations to this. You could either be trading into a demand zone and having low volume while having a downtrend, or you could be trading into a demand zone but then have a reversal into the upside while you're in the demand zone and then have that low volume. So it kind of depends, because if you're in honestly, this question will be answered during the whole live itself. I'd rather not answer it now because it would just confuse you. Tastyworks is actually a good platform. I do want to look into it. I do believe the commissions on that are capped at $10. Again, correct me if I'm wrong. But yeah, Tastyworks is also a good platform. Just is a little bit complicated if you look at it in the beginning, but it's definitely something worth looking at. Okay, next question. Sorry, there's so many things here. It's fine. Do you use anything else in confirmation with supply and demand zones? Is this the sole strategy you use? Do you deviate strategies based on stock you're trading and whether you're trading stocks or option? This is an amazing question. I love this question, especially this last part over here. So to answer the first part of the question, do you use anything else in confirmation with supply and demand zones? Absolutely. You can use, when it comes to supply and demand zones, you can use price and volume analysis, right? You can use even other indicators like there's a MACD, which I went over in the previous live. It was like the part 2 of the supply and demand zones. Sorry, I was drinking water. That's some proof. But you go according to the MACD, right? I'll show you an example here. Let's see. Just look at this chart right over here. If you guys could see this SPY chart right here, if you look, you can see no, actually this is not a good example. Let me give you guys a better example. Alright, so the way briefly, again, you guys could go over you guys could look over this in the part 2 video, which is sorry, let me show you guys which video that is. But this video right here, how to make easy money, how to trade off of supply and demand zones. I go explaining the strategy on using the MACD when it comes to trading this, if you do not want to use price and volume analysis. So definitely take a look at that. But when it comes to using the MACD, if I could give you a really brief explanation. Right, let's say we plot this demand zone like we have over here. What you can do is you can refer to the MACD, and every time the blue line crosses this yellow line right here, right, that means there's gonna potentially be a bullish trend, and that's what gives you a basically a chance to enter in calls for this example, right? So we have this demand zone. We enter into this demand zone, and right over here, as you can see, I can't really zoom it in, right? But if you could see right here where my cursor is, you could see the blue line crosses over the yellow line and it holds above there. And you could see at this moment we broke above the demand zone, right? So you could have entered, so sorry, but if you can just mute your mics, please. just for respect of everyone in this meeting right now. But if you break above the demand zone, or even if you're in the demand zone and your MACD crosses, right, if the two lines cross, then you could have entered into calls right here, and you could have profited pretty decently. You could have went from worst case 420, right, 420 all the way up to 423, and that's like in options for SPY, that probably would have been a 60% to 100% trade, probably even more, to be honest with you. So that's where you can use the MACD when it comes to using other indicators to validate a trade in supply or demand zones. But again, if you want to see a deeper explanation, watch this video in our YouTube channel. You could see it in this channel right here where it says live recordings. So it's right here, so check that out. Ramadan Mubarak to you too. Sorry, I have horrible pronunciation. But the next question, right? Next question was, is this the sole strategy you use? No, I don't solely use supply and demand zones, but it's very powerful that I use it a lot, right? So why change something that's not broke? So that's why I use supply and demand zones a lot. And do you deviate strategies based on the stock you're trading and whether you're trading stocks or options? No, I don't change the strategies, right? Because if I keep on trading strategies, it just means that the strategies are not really that valid. The only thing you do change is just the stock's psychology, right? Or patterns that a stock repeatedly repeats over time. But yeah. Yeah, it's gonna start in a little bit. Sorry, what do you say?
I said, what's up, guys?
Oh, what's up, man? Sorry, that just caught me off guard. But let's see. Might be a little off topic, but what resources can I give my middle schooler to prepare him? What you should or shouldn't had done? Okay, so basically you're asking where to start as a beginner. The great thing is you have YouTube. Literally, you can find everything you want on YouTube. Well, almost everything. So just resort him to YouTube, and that's literally where you can find your answers. Compared to like when I was 12, YouTube was obviously there and present, but you couldn't really find that many videos on this topic because it wasn't just as common back then for people to be as open about it. But as YouTube grew bigger, you know, they started paying more ad revenue for and stuff like that. So people were like, oh, why not actually start posting this content and making money off of, right? So more and more videos came out. So you definitely will find a lot more on this topic, on trading in general. So please don't be shy when it comes to YouTube. Use it as if it's a candy bar and that's the only thing you have to eat. Okay. I chart out supply and demand zones along with wicks. Do you scalp off bounces or more of a day trade type? What time frame do you trade off of? I notice patterns with a 15-minute candle in pre-market that some of the wicks can act as a support and resistance from institutions placing big orders in the pre-market. Well, as you guys probably know from past lives, what I use is the before the market opens and after market closes, I look at the 2-hour, the 1 hour, and the 4 hour, and then that's what I use to plot out my zones, right? And during the day, I use the 15-minute and the 3-minute to trade. That's what I personally use. So hopefully that answers that part of the question. And you can technically use pre-market resistances and supports. It's just less likely for it to be it's less likely for it to be validated compared to open market level creations, if you know what I'm saying. So hopefully that answers that question. Have you read any books to help start your investing? What long-term investments do you purchase with your withdrawn money profit? What is a recommended max purchase volume do you think could be done with options and SPY? For example, you can't purchase $100,000 of options on a small cap. There's no volume to fill your order. Well, have I read any books? Absolutely. That's how I learned the wick-off strategy. Would I recommend it? Absolutely not, because it's all a bunch of old white folk mumbo jumbo that makes it so confusing for you to understand. So you can either search it up on YouTube or you could be patient enough for me to post videos about it. where I just simplify it, where you can literally learn all you need to know, but simplified, because they make it so complicated than it has to be. So, but what long-term investments do you purchase with your? I said this in the beginning of the live. I don't want to repeat myself. For time's sake, what is the recommended max purchase volume you think can be done for options when it comes to SPY? Usually, when it comes to SPY, you can get filled up to 1,000 contracts every 2 orders. So like you could get 100 to 500 contracts filled in a purchase very easily, in like 1 order very easily, but it gets harder once it reaches 1,000. But yeah, but the smaller cap stock, right, like you say over here, the smaller it is, the harder it will be to fill, because there's less people selling it, right? So keep that in mind. Right now, the basics of trading, how to draw trend lines and support and resistance, but I'm currently learning the candlestick patterns. Once I master that, what's next? Price and volume analysis. Literally, that's price and volume analysis, and supply and demand zones are the 2 most important things you can learn, and literally, you can just trade off of those 2 things. I'm not even lying to you. You could literally just be profitable just trading off of those 2 things. Of course, adding more knowledge to it will help you become even more successful, right? But yeah. Solid, really trading awesome. Okay. Will I marry you? I'm currently married, so no. Okay, let's see. I actually have a question for everyone. I be using Robinhood sometimes. What do you think is the best way instead of swiping up to fill a limit order? So this is not just strictly for Robinhood, but if you want to get a limit order filled, right, instead of just getting the contract fill, like, let's say the contract price is at 0.5, right, which is $50, and you set your limit order to $50. There could be a possibility that the price rises to 0.52 or 0.53, and your order won't get filled. So what you can do is obviously set a limit order for 2 cents or 3 cents more. Do keep in mind, when you do this, you are putting more risk onto the contract and onto the position, because you're cutting out the potential profits you could have gotten if you would have gone in at 0.5, right, compared to 0.53. That's almost what is that? 0.55 is 10%, right? So that's almost like 7% profit that you missed out on, and 7% more risk you're putting onto the position. So do keep that in mind, right? So definitely, yeah, keep that in mind. I don't know why I just repeated keep that in mind 5 times. As you guys can see, I'm on very few brain cells right now. Okay. You can do market fills, but that again is riskier because you could get filled at a higher price, and as I said before, that puts more risk into your position. But yeah. Yeah, I answer this one. I answer this one. Hey Kevin, can you talk about everything you need to know to be successful trading SPY and my full strategy? Absolutely. I have no problem with that. I'll be doing that over the time that I have the lives and everything. So yeah, there's no reason for me to hide. I don't get why some analysts don't share their information like they should be. It should be all free. Like what? If you guys learn what they're gonna start losing money or something? No. So I don't get why they're being stingy about it. But how am I feeling? Yeah, I don't know if you guys didn't know. I was feeling very sick the last live, but I'm feeling better. But my throat's still kind of bad, but it's better. That's for sure. Let's see. Hopefully, I think we are done with questions. Oh, okay. So you're saying when you scale, do you just swipe up? Well, I don't use Robinhood. But, I mean, on Robinhood, correct me if I'm wrong, don't you have to swipe up to place the order? right? Like after you fill in the limit order, don't you have to don't you have to swipe up? And don't worry, Hasa, I'll get to your questions in main chat. Don't worry. Yeah, I mean, regardless, I think you have to swipe up. So yeah. What do you do when you scale or sell to get the best price and highest profit? Okay, a lot of people, a lot of members in all the servers, they're like, oh wait, I didn't get filled for this price which you alerted, right? Well, the thing is, I kind of give alerts of when I'm gonna be trimming, right? And the reason why I do that is because I set my limit orders before I alert saying that I'm setting a trim. Because a price could reach a certain point and then immediately dip afterwards. And then you'll miss out on that trim or that scale or that exit, right? So you wanna. This is again another way you can prevent yourself from being greedy when it comes to trading and keeping profits or you just. Let's say you enter at 0.50, which is $50. 10% is always the sweet spot when it comes to taking profits. You could set your limit order to 0.55, and there you go. The second it reaches 0.55, God willing, your order would get filled, and there you go. You got 10% profit. Versus waiting till it reaches 0.055 and then setting a limit order, because there's a chance that it won't get filled, right? There's a chance it could immediately dip afterwards. Now, obviously, if you set your limit order beforehand, there's a possibility the option could increase in value past like 10%, right? And you miss out on that profit. But who cares? At least you're missing out. At least you're avoiding the potential of your contract going from 10% gain, right, to like 20% loss. So you just got to be safer, right? Who cares about if you only get 10%? 10% it literally builds in your account. Trust me, that's how I built my account. So hopefully that answers your question. How can you tell the difference between buying and selling volume? Well, I'll get into that. In this live. Don't worry. Again, Hustle, I'll answer your questions. You ever use the divergence strategy? That's what I've been using for trading futures, and it's been doing well. No, not as much. Maybe I do, and I just really suck at terminology. But yeah. But there's strategies that work, some strategies that don't, and divergence. I know for a fact it is a pretty good strategy. So I know a few good analysts and friends who use it. So like if I buy at 55 and it's 60 and I swipe up right now, sell for 55 or 55 or 50. Or 50. Okay. That's because you're doing a market order. That's why. Yeah. So do a limit order instead of a market order. There you go. Let's see. So should I take profits? Joey, you're stupid. Take profits. I know you're joking, so I'm not gonna kill you right now. How can you tell an exit or when to cut? Literally 10% profit. If you don't want to listen to our rule, you're never gonna be successful. There you go. Okay. Here's this. A lot of people deal with the problem of taking profits, right? Let's say 10% profits is small for you, which should not be the case if you want to be successful in trading, but let's say it is. What you can do, again, this is risky, but what you can do is wait till it goes to 10% profit, right? You set your stop loss at 5%, right? And then when it goes to 15% profit, you raise your stop loss to 10% profit. When it goes to 25% profit, you raise your stop loss to 20% profit. You get what I mean? So you can incrementally raise your stop loss so you don't have to, quote unquote, lose out on gains, right? But of course, doing that puts more risk on your position. So again, that's up to you. But again, if you guys could keep out anything else other than questions into the main chat, please. Thank you. But alright, we're almost done with questions, and I'll get into the handy dandy presentation we have, and I'm gonna sound cheesy as heck. I'm not ordering anything tonight. I know, man. I actually ordered a don't judge me, but I ordered Popeye's spicy chicken sandwich. I re-ate it before I got on because I didn't eat dinner, so that's what I ate. I know. It's good. It's good, but It always has to be at the right time for me. But let's see. All right. Is there any questions here? I missed some questions up. Okay, let me see. So what questions? Oh, okay. Here are your questions. All right. Is it possible to correlate order block strat to volume and strength resistance? Absolutely. Order block is something I actually want to look into implementing into my strategy. I'm looking for a good way to implement that in an efficient way. If you guys don't know what order block means, it's basically like seeing the order block or order book. Is basically seeing the orders, right, or level 2. So basically, how many shares are being bought, how many shares are getting sold, at what prices, stuff like that. So that's what he means by that, and that's definitely something important you can incorporate into it. So that's definitely something I look to correlate into it. I just need to find a good I always like to find efficient ways to incorporate stuff, right? So after I find an efficient way, then I'm gonna definitely do that. Like I want to find a way to incorporate order book into like trading supply and demand zones, right? Like when's the best time to look at it? When should you actually buy or sell? That kind of thing. So that I'll definitely tell you in the future. Also, do you prefer options over futures? If so, why? I've not personally started trading futures, but I kind of prefer options just due to the fact that I know this is going to sound crazy, but you're limited to the time you're trading on the stock market. Now that might seem crazy for you guys, but think about it like this. If you have 24 hours and 6 days a week to trade, right, which is the case for futures, there's a potential chance you're gonna overtrade, and that's gonna end up, obviously not working in your favor most of the times, not sometimes. So in my opinion, I kind of like how options and the stock market keep us limited to a certain amount of time, where first of all, with this because of that, there's going to be a lot more volume, right, and less volatility because of that. So I prefer options, but maybe that opinion might change. But hopefully that answers your question. Let's see, anything else? Yeah, so I'll be going into price and volume analysis today, mostly volume analysis. Oh no, good night. I'm so sorry this live is taking so long. Okay, I know, I ordered Wendy's last time. I didn't order Wendy's tonight. What's so white? What is so white, Chris? Popeyes is not... Okay, the only thing I like from Popeyes, honestly, is a spicy chicken sandwich, and is, chicken pieces, but only the legs. That's the only thing. I mean, anything, I don't like breast. I don't like breast or wings and stuff like that. Futures are very tricky. Yeah, it's very tricky. You have to definitely know your stuff before you trade. Treat 3 priests. No, there's just 3 pieces. That's like nothing. Anyway, okay. Alright, sweet. So finally, let's get into the presentation. The cheesy presentation, right? Just want to confirm, I'm going to leave this on here for a few more seconds. I'm going to switch back to you guys. If you guys could tell me in main chat, you guys can see the presentation I just put up, right? Oh my gosh, excuse me, I did not mean to burp. Right, you guys could see it? Right, what?
I can get it.
Okay. Alright, sweet. Okay, sweet, okay. Alright, after saying sweet for the billionth time, we're gonna get into this. So, today's topic is volume analysis, since this has been one of the most requested topics, and obviously it's definitely one of the most important topics for trading. So, let's get right into it. Again, my name is Kevin Silk. I've made Okay, for whoever that is, if you
The guy's name is Cash Out.
Okay, let's see.
I took care of him.
Okay, just ban him from the server if you don't mind. Sorry about that, guys.
I kicked him.
Aw, thank you, Joey.
You're welcome.
Okay.
Cutie.
Alright, so just like in high school, I put a little credit thing, right? My name's Kevin, so there you go. Hope you guys like this part of the slideshow so far. Alright, but getting into it. Okay, so volume. What is volume, right? So volume is the most leading indicator. What do I mean by that? Well, as you guys know, when it comes to charts, you could add indicators on it, right? And there's indicators like the MACD, the RSI, the EMA, the SMA, Bollinger Bands, stuff like that, right? Those are the most commonly used indicators. But a lot of people actually don't know, or a lot of people don't actually realize that volume is an indicator itself, and actually so is price. And why is price and volume actually better indicators than all these other indicators like MACD and RSI? Well, the answer is that volume and price are leading indicators, while all these other indicators, right, like the MACD, RSI, Bollinger Bands, SMA, EMA, VWAP even, right, these are all lagging indicators. And what this means is that it updates after the bar closes, and the current thing that it's showing is using previous data compared to price and volume that shows current data, right? So it's literally showing you like by the second, right? Volume and price is showing you by the second what's going on, versus all these other indicators, right? They show you either like a few seconds after, a few minutes after, based on whatever your time frame is. It shows you after that candle closes or after a certain amount of time. So these are lagging indicators. So just keep in mind, price and volume are the only leading indicators in the stock market and in any kind of market. No matter, there's some people who try scamming, saying that they could give access to indicators that are not lagging. That is total BS, so don't ever listen to that. The only live and leading indicators are volume and price, so just keep that in mind. So why is it good to be a leading indicator? I just said because it shows you the current price, right? Not current data, not current price, current data. So that means that you can efficiently and accurately place a trade based on current data versus delayed data, because delayed data will show something of that past, right? So what happens if that data is no longer relevant in the trend that you're looking to trade? So that's why volume analysis is so important, and so is price analysis, is because it uses leading indicators, which is price and volume. Now, how can you use volume, right? Well, volume is used to determine the strength and the weakness of a trend, and that's what we'll be going over in the next slides, and I'll be showing you guys examples. But basically, heading on to the next slide, and I'll explain all of this. You guys could see these beautiful arrows I drew right here. You can see they're symmetrically perfect, right? And they're red. So you could see my artistic skills. But what do I mean by this previous slide when I said volume determines the strength and weakness of a trend, right? Well, I find the best way to explain is by showing an example. So we could see this example right here. We could see, this is SPY, by the way, since you guys know I mostly trade SPY. You could see right here, the price of SPY, it doesn't matter about the price right now, right? But we could see like the exact price. I mean, like it doesn't matter if this is 451 or 440. What I'm trying to say is you could see the price of SPY declining over time, right? And you could see while it's declining, you can also see here on the volume bar that the volume is also decaying, right, or decreasing. But Joey, again, if you could ban that person from the server, please. But you could see that as this is decreasing, as the price is decreasing, or as this trend is going on, the volume decreases. And as you guys know, nothing can run on forever, right? So even though this is a downtrend, there is bound to be a reversal into the upside. So what this means is the longer a trend goes on, the more the volume decays, right? And that means that the trend, right, this downward trend in this situation is weakening. So this is where you use volume analysis to predict where a reversal is coming up, right? And again, everything will make sense by the end of this live. And if anything, if if anything doesn't make sense, you guys could feel free to ask questions. Now, how to strength and weakness, right? Sorry if I'm all over the place. The next example is we could look over here. What we see over here is the weakness, right? We could see that it started bullish, but then it started going into the bearish side, right? Started trading into the downside, but eventually the volume started to decrease. And this is a screenshot taken right after this screenshot, right? Like literally a few bars after. You can see that there's a reversal into the upside, right? And when this reversal starts, volume increases. And what this shows, right, is with this trend right here, right, in this situation, this bullish trend, there's volume increasing over time, which therefore proves the strength of the trend, right? So here you could see the weakness of the trend. There's going to be a reversal, right? Versus here, there is a pickup in volume, which shows that there's going to be a continuation in the trend, and there's less likely of there to be a reversal. Now, obviously here we had a reversal, but again, I'll get into that. But yeah, basically that's how you can determine the strength and weakness of a trend. So actually, sorry for my accent right there. Actually, I messed this up. So this is the prior, right? This is how the first screenshot, and this is what followed after it. So you could see that this trend right here was the main trend, right? Because we had volume validating it because it was increasing. So it was showing that the overall market supported this bullish trend, versus when it went into this bearish trend, the volume decreased over time, showing that even though the market was in a bearish trend during this time period, it was going to be a temporary trend, because if we looked at the previous movement, right, we could see that the volume supported more of the bullish trend versus this bearish trend right here, because the volume is decreasing. Just want to ask quickly in chat if that makes somewhat of sense to you guys. Again, I'll continue explaining what I mean into the live, but just if I could get a few yeses. Okay, sweet. Alright, yeah, again, if you guys have questions, I'll get into it. But as I said, volume can also help predict the reversals or validate them, right? And what that means is, the way you can look at is, if volume gives a lot of a high effort, as you see right here, but has a weak result in the price, you can expect a reversal. So this is where price analysis and volume analysis tie in. Sorry, I had to cough there, but this is where you could pair price and volume analysis. So this is the most important thing. This is where you can be the most profitable when it comes to trading off of volume analysis and price analysis. It's trading off of reversals, right? So as I said before, you can tell the strength of a movement based on the volume, right? So you could see over here we had an increase in volume that indicated that this bullish trend was strong and that it's going to continue. And as you can see right here, we had this huge gap up, right? Huge gap up over here on SPY, and we gapped up from like what, 450, 455 all the way up to 460, which is a pretty big gap up. And because of that, we actually had these huge two green volume bars right over here, or just volume bars, right? And you could see, even though we had these two huge spikes, there was very weak results. And what I mean by this is, if you see inside this yellow circle, we could see in this first green candle right here, or blue candle in my situation, you could see that it's tried testing this high, but it went back down. It also tested this low, but it went back up. So it was like it was kind of like a long wick candle, right? And basically this is a start of showing us that there's a weak result with this high effort volume, right? And then we go on to the next candle. We could see that even though the prior trend was a bullish trend, we could see that the next candle opened up and it started to be bearish, right? Instead of a bullish candle, and we could see an increase in volume, right? But it ends up being, it shows up as a buying volume bar, right? It shows up as a volume buying bar. Okay, what can I say? It shows up as buying volume, right? On this chart over here. But even though it shows that, you can see that it was relatively bearish when the candle closed. So right here would have been a perfect entry for puts, and you would have been able to profit very easily. So this is where you can make most of your money when it comes to price analysis and volume analysis. Is trading off of reversals and predicting reversals, right? So again, we could see another example in this picture right here. You can see this high effort in this volume bar right here. It shows as a buying volume, but even though you could see that the candle was actually bearish, and you could see in the following candle, there wasn't really much effort to break above this prior candle. You could have entered into puts and made a decent profit all the way from trading even, let's say, you got into puts at 458, you could have traded into the early 458. So that's basically how you could somewhat trade reversals, right? Using volume analysis. You can also use it to validate breakouts and expose fakeouts. Oh wow, that actually rhymes. I didn't even realize that. So what do I mean by this? Well, whenever you're trading in a range, right? This is a range right here. And what a range is basically two price levels that the stock is trading between. So in this situation right here, you could see that SPY was trading between 478.98 and 473.81, right? And obviously when you're in this zone, when you're in this area, right, it's going to be very stale. You're not going to get much profit. So what do you want to trade? You want to trade the breakout. But obviously, you can also get faked out at the same time. There's always going to be attempts at breaking out of the range, but it could be a fake out at the same time. Perfect example is this first yellow circle we had right here. Tying back to what we said right here in this slide, keep this in mind. High effort versus weak result, right? This is a prime example of that. We could see that there was high effort right here, and it showed as buying volume in the volume bars, right? It showed as buying volume. But you could see how tiny of a speck this candle is, right? This candle is immensely small. It shows barely any effort, right? There was much bigger candles in the previous times, right? With minimal volume compared to this volume bar right here. You could see, like right here, for example, there was, like, you could see this volume bar. There was relatively much less volume compared to this volume right here, but there was barely any movement, right? So you wouldn't enter in here. You could use volume analysis to see that this is a fake out, and you would not enter into calls at this moment because it's not breaking into the upside. But you could see over here, once we break out of this zone into the downside, right? We break below 473.81. You can use the volume indicator and price analysis, right? You could use volume analysis and price analysis as confirmation to see that once we broke this range and we start to increase in volume, and we actually held below this level, right? And we had increase in volume and high volume correlated with high effort, right? So high effort and high results, right? Or big results, not high results, but strong results, right? Instead of the weak results, you could have entered into puts and you could have made profit again right here. So this is the main points of volume analysis. It's basically confirmation and predicting where you could get in and when you could get in, right? So the main important thing is the effort compared to the result. So if there's high effort and there is a weak result, that means there's bound to be a reversal, right? Again, no matter what you use in the market, nothing is going to be 100% accurate. Just because the volume indicator is a leading indicator doesn't mean it's going to be 100% accurate. is just going to yield you more accurate trades versus other indicators like lagging indicators, right? So that's why I'm bringing this to you. So don't just trade off of volume analysis and be like, oh, I could full port this play because I know it's going to be 100% correct because volume is showing me something. Well, it doesn't matter because in this market right now, we're not in a technical analysis market. We're in a news analysis market, which means that news will absolutely trump technical analysis. So it doesn't matter how solid your technical analysis is. So just keep that in mind. Always use whatever strategy or indicator you're using as confirmation, but confirmation for a trade that does not risk your entire portfolio. The greatest rule of thumb is never put more than 10% of your portfolio in each trade. But anyway, back to what I was saying. So high effort versus with a weak result means that there's most likely going to be a reversal. If there's high effort and a if there's a high effort in volume and there's a strong result, that means there's a breakthrough, right? But you can also use high what's it called? Sorry, high effort versus weak result to also avoid fake outs, right? So you could use that when trading within a range. Also, something you want to keep in mind, if a trend is having low volume, so that will be basically low effort versus weak results, that basically means that the trend is no longer going to be strong and there's bound to be a reversal as well, right? So just keep those in mind. Right here you can see that I had two screenshots up over here, and below in the caption I said low volume equals no continuation, right? This ties into what I literally just said a few seconds ago. If there's by the way, if you guys did not know this, there's always two type of trading days. There's a trend day, and there is okay, give me 1 second.
He made a new account.
Okay, that's kind of stupid, but alright. Yeah, just please ban him whenever you get the chance, because that's kind of childish at this point. But going back to what I was saying, there's always two type of trading days, right? There's only two type of trading days. There's a trend day and there's a range day. Now, what's a trend day? Trend day is basically what you see in the second screenshot over here. It's basically where the stock or the market is, well, basically a stock is having, is following a trend, whether it be bullish or bearish, right? So in this example, we're having a bullish trend. We could also, if we go back to this is a bearish trend, right? So if this could be, this is a range, this is not a range, this is a trend day, right? This is a trend day. And so is this is a trend day as well. But what is a range day? Range day is basically where you're trading within a range, right? And it's very stale. So right over here is considered a range, right? And a trend is when trend day is when you're trading according to a trend. So when you're in trending days, right, you obviously want to follow the trend, because you can trade like tiny pullbacks, right, where the momentum just cools off a little bit when people take profits. You can trade that, but those are obviously going to be scalps versus bigger gain day trades. So the way you can either avoid that or look to trade these pullbacks is by easily using volume analysis. You could see here we have this like somewhat of a bullish trend, right? And we had this pullback right over here on this yellow circle. But you could see the volume here was relatively low compared to the previous volume bar, which means that this pullback right over here in this area was not actually a longer term a longer term trend, right? So it's not any type of reversal, because one, there was no spike in volume, right? Two, the volume is very weak compared to the prior volume bars. And you could see the similar thing right over here in the second screenshot. You could see that there was two pullbacks, right? You could see this first pullback we had over here. You could see the volume was not actually that high compared to the previous volume. And you can see the same thing over here in this tiny pullback. You can see that the volume is low, which means that these pullbacks are not valid for a reversal. So you look to either get into in this situation a call, right, to continue the uptrend, right, to profit off of the continuation of the uptrend, right, or you could either scalp the what's it called, the pullback, right? So that's how you could use it as well. And volume and level creation. So I didn't get time to send screenshots about this, but just want to make sure. All right, oop, wrong screen. But I don't use TradingView as much, so I'm so sorry this is not on dark mode. I do not know how to make it dark mode. Can I change it to dark mode? How do I change it to dark mode? I'm 21 and I don't even know how to use this. That's crazy. Does anyone know how to say this? You know, it doesn't matter. Anyway,
right click the chart, hover over color scheme, and click dark.
Show your lifesaver. Okay. But anyway, back to what I was saying. So you can actually use volume to create levels, right? And what I mean by this is actually going to this example we had on a screenshot in the previous slides. You could see right here, every time we hit the top of the range, right here, you could see we hit the top of the range right here, right? We hit the top of the, almost hit the top of the range right here. We hit the top of the range right here, right? And we hit the bottom of the range right here. You could use we could use these big volume candles, right? Or big volume bars to show where a level is valid. Because what these, basically what these big volume bars indicate is that it's validating that there's a lot of trading going on at these levels, which means that there's a lot of buying and selling going on, which again means that these levels will be respected more likely in the future, right? So according to this, we could have easily plotted a resistance right here, right? We could have plotted resistance at 478.85 because we see that there was a big volume bar, right, following this right near this resistance right here, right, that was created. Then we could see again that it was again respected, and there was a big volume bar supporting this level, right? And then you could see in this testing of this support right over here, you could see once we were about to test it, there was a big volume bar as well. So that's how you can also use volume to actually validate and plot out levels. Again, I don't use TradingView as much. There is another similar kind of volume indicator called volume profile. Let's see if I can pull it up. Let's see. Just give me a second. Man, I'm such a goon when it comes to this. Give me a second. Let's see if this works. Nope, that's definitely not what I'm looking for. Let me show my Thinkorswim. So on Thinkorswim or on TradingView, I don't know why I can't find it. You can actually add this indicator called the volume profile, right? And what this shows is, I know this looks weird right now, and you're like, what the heck is that? Basically, what this shows is the amount of volume traded for a certain price, right? So you could see according to this, according to the volume profile right here, you could see there was a lot of trading. There was a lot of trades that were placed within this range, right? Especially around this price right here, which is around 438. And you could see that this was resistance, right? So that you could also use the volume profile as well. But I personally don't use it as much. You don't need the volume profile as much because you could kind of tell what the volume profile shows using the regular volume bar. So it's up to you whether you want to use it or not. I personally don't use it, so that's just basically what I want to show you guys quickly. On Thinkorswim, I did personally code a custom indicator where it shows buying versus selling volume. So I'll actually share that with you guys right now. If you guys
on TradingView, it's called a volume profile heat map.
Heat map
For
okay,
anyone,
hold on.
yeah, volume profile heat map for anyone wondering. That one it puts it on like the whole chart instead of like the right side of the chart. But
oh, okay.
It's similar.
Okay, for some weird reason it's not showing for me, but I'm just probably doing something wrong. Anyway, back to this. I'm gonna share with you guys the indicator for this. If you have Thinkorswim, it works. Post it in the announcement tab. But feel free to apply that. It's basically gonna show the buying versus selling volume, right? So as you guys can see, the light blue is basically buying volume versus the pink, right, is the selling volume. So you could definitely use this to maybe make it a little bit easier for you to tell the difference and trade based off of volume. But that's basically what I actually had to say about volume for today. I know there's going to be a lot of questions, and there should be a lot of questions, so feel free to start asking me in the Ask Bishop chat. I'll tag you guys in here, so I'll give you guys a few minutes to type in questions. There's a few questions in main chat, so I'll start answering here. So wait, so doesn't matter the trend if volume is increasing, it's stronger? Yeah. So even if let's say even if there's a bearish trend, you can still have volume increasing, which means that the bearish trend is strong, right? You could see right here. Here's a perfect example. You could whoa, ew, that's ugly. What was I trying to show, Kevin? Right here, you can see that we were having a downtrend, right? You can follow this. Can I put an arrow? Okay, there we go. Let me delete this. You could see that we had this downtrend. Okay, I'm officially done with myself. Give me a second. You could see that we had this downtrend right here, right? We had a bearish trend, but you could see right here that the volume was increasing over time. If you see on the volume bars in the where my cursor is, which means that the trend was strong, right, all the way, of course, up to this point. But the trend was very strong, and it showed continuation while it was going, right? So that's what. So basically, it can go for both sides. It could go for bearish trends, and it could go for bullish trends. So if there's a bearish trend or if there's a bullish trend, doesn't matter. If the volume is increasing with it, that means that the trend is strong. Now, do keep in mind, the more and more the volume increases, that means that there's a more and more chance of obviously a reversal occurring, right? Because eventually, if the trend is continuing, it has to stop at one point. So also keep an eye out for that. You don't want to get in too late, so just make sure you find the proper timings and stuff like that. But hopefully that answers that question. Alright, let's see. Dumb question. There's no such thing as a dumb question. But does the volume bar show before the candle? No. So, to my dumb knowledge, what I think you're saying is, let me change this to, I use bars personally. I don't like candles as much, but I'll change it to candles since most of you guys use candles. To what I'm understanding is you're asking is, let's say we're on the, let's say the 3-minute chart. Let's say we're on the 3-minute chart and like a new candle opens right here. You're asking is if when this candle opens, will the volume bar open with it as well? Yes, it opens with it as well. So whatever time frame you are on, the second the volume the next candle or bar opens, a volume bar will open as well. So hopefully that's what you're asking, and hopefully I answered that. Yeah, it's kind of like volume divergence, or yeah. All right, let's see. What was the volume indicator on Thinkorswim? Again, it's in the announcements tab. So check it out. You could just easily copy it down using that link. Customizable. Last indicator is also on Webull. Very sim. Oh, it is? Okay, sweet. That's cool. I didn't know that. And to what I know, Webull also uses TradingView as its charting platform. So I'm guessing that it's also available on TradingView too. So that's pretty cool. It's not volume rated, but what's the kind of trading do you recommend trading for SPY? How do you trade it, and any tips? Basically, all the strategies I've said in the past lives, and whatever I'm gonna say in the upcoming lives, can be used for trading SPY. It works perfectly fine. Supply and demand zones, support and resistance levels, price and volume analysis. It all perfectly works well with SPY. But come on, guys. Any questions? Feel free to ask me whatever you want. There's no such thing as a dumb question. The only dumb thing to do is not ask a question. Aha! Feel free to ignore me anytime. What do you do when you see dojis with high volume? That's basically tying back to, that's a very good question. Thank you for asking that, Cheesy. It's basically going back to what this slide said. That's basically high effort with weak result, right? Because that means that there's high volume, right? Like right over here in this example, there's high volume, but the doji candle is basically a weak result, right? It's not really going up. It's not really strong. It's not a strong big candle, right? Like this. Let me show a better example. Let's see. It's not sorry, I had to burp there. It's not like this candle right here, right? It's not a big strong candle. So doji candles basically, right? If they show high volume and you have a doji candle, you can have a possible reversal after that. Hopefully that answers your question. Cheesy. Sweet. Glad I answered your question. Any other questions? Yeah, yeah, honestly, I should have done that, especially since I don't use TradingView. Would have been perfect. I could have just used the regular candles like this. My bad about that. If you guys didn't know exactly what my colors represented, basically the light blue or turquoise candles were basically the bullish candles versus the pink candles were the bearish candles. So sorry if that did confuse any of you. That's a very valid point, so sorry about that. I'll look to not do that mistake in the future. Any other questions? If you guys, so what I'm getting right now is all of you guys are somewhat confident when it comes to volume analysis. You guys don't have to be shy to chat, you know that, right? You guys can feel free to definitely type in chat or even speak in chat. It doesn't. I don't mind as long as it's not like whatever that dumb guy was doing before. String candles? What are string candles? I suck at terminology. Strong candles with low volume. Strong candles with low volume, I did not go over that, but it kind of ties into what I said, something that I said already. It basically means that that trend is not really valid, right? Or that trend won't continue for a long time, so it's kind of risky to enter into that trend, if you get what I'm saying. When did I go over the MACD? I briefly went over it this live, but you can find an in-depth review in this video right here on our YouTube channel called the part 2 of supply and demand zones. You can find it in the live recordings right over here. If you go to live recordings channel, you can find it there pretty easily. How many time do you spend a day for trading, and how did you choose stocks? Well, it's okay. There's no right answer to that. The best answer is you trade when you have time, and you trade only when you can monitor a trade, right? You don't want to trade when you cannot monitor a trade, because if you do that, then you're going to end up just burning yourself in a hole with a contract that went red, right? And you couldn't close it. So, how do you choose stocks? Well, the best stocks to trade are always going to be trading blue chip stocks, or ETFs. So, what I mean by that is, I'll make a tiny list, right? Actually, no, I'll make it in chat right here instead of just putting on Notepad. So the tickers I always look at, right, are SPY, IWM, SPY, IWM, QQQ, Nvidia, Apple, AMD, Tesla. These are all high cap stocks, right? So it's less volatility because there's more volume on it. So more of the core and psychological, whatever you want to say, trading strategies are more bound to be respected on the higher cap stocks versus like penny stocks and stuff like that, or low cap stocks. So hopefully that answers your question. Have I traded the Cobra algo? I have no idea what that is, and I don't believe in algorithms. I don't think you really need algorithms to trade. SPY green or red on Monday? I always... Okay, let's see. You know what? Let's see it together. Let us see it together. Alright, so recently we actually broke above this supply zone we had at that started at 452, but which is actually good news, because I would want it to break above 462 and hold, because if that happens, we'll be in a less choppier market than we are currently right now, right? So if we break above 462 and we hold, we'll be good, and we'll be in a safer market. So hopefully that does happen. But we could see here that we broke above the supply zone, but it kind of got rejected somewhat, and we traded back below it. That's why we actually, if you saw on Friday, I had puts, right? I was going to swing it, but it was kind of risky. But we had puts that we traded, and it was easy profit. But since we broke through this supply zone, we can technically expect SPY to actually test 462 within the coming week. Because if you guys take a look at this, you could see, don't actually go according to these lines. These are just like roughly I'm just plotting right now. But you could see that we are trending into the up. We're having a bullish trend right now, and this pullback, these are all pullbacks. So this theoretically can be a pullback right here. So hopefully it is a pullback. Hopefully, as you can see in the last 4 hours of the market on Friday, we did start trading back into the supply zone. So this is a good sign, because since SPY was able to break above the supply zone, this means that this zone is no longer valid, right? So or it's not no longer valid, but it's less likely to be respected. So we could have higher confidence that SPY will actually break above the supply zone again and actually break above the high of this candle right here, which is 462.07. So we could potentially break above this candle and actually trade up to, let's see, where can we trade up till? If you break above here, right? If we break above 462.07, we could trade all the way up to 465, right? That'll be another that'll be a kind of an important what's it called, resistance level, right? And then if we break that, then it's going to be a test of this supply zone, which is, let's see right here, it's between 468.45 and 471.75. So that's going to be another supply zone that we have to test. So there's obviously going to be supply zones that SPY has to test on its way up. But if we can hold above 462, we're in a safer market, and that's good for all of us, because that means less volatile and less unpredictable markets. Apple's a slow-moving stock. It's like an old stock. It's like Facebook. That's why I don't trade Facebook as much personally, because it's an old stock. You know, it has low volume on it compared to a lot of other blue chip stocks, right? So that's why, like Apple, you don't see that many trades from me using with Apple, because it's just it's not entertaining, right? No need to thank you. It was a pleasure. Hopefully, kind of getting a lack in questions, so it kind of breaks my hearts. Okay, seriously, heart, because I hope I actually explained everything in detail, and I didn't confuse you guys. I know it seems like, oh wait, that's pretty simple, but the thing is, like, it's not something you actually would be able to realize until someone tells you. So hopefully I did that for you. On my SPY chart, was the volume increasing or decreasing? Well, you can actually see, right? This is perfect. I shall show you right here. You can see right in this area that the volume is actually decreasing. The volume is decreasing on this downtrend, right? So what does that mean from what we learned? Decreasing volume with a trend. Please tell me cheesy. I want you to answer this. What does that mean? If we're having this should be simple. Come on, I believe in you. We're having a bearish trend, followed with decreasing volume. What does this mean? Yeah, that's exactly true. That means that, soon in the likely future, if we were to follow technical analysis, again, news can absolutely trump this, but let's hopefully wish that there's no news, right? Since we're in a news market versus a technical analysis market. But we can expect to have a bullish market soon, right? If we start having a pickup in volume and we start having a bullish trend, right? So we start having this bullish trend right over here. So if we can actually start having volume picking up, then we can actually confirm a potential reversal. So, congrats, Cheesy. Which stock would you recommend for small count folks? IWM. That's an easy answer. IWM and SPY, but IWM absolutely. Because look at this. I'll show you IWM. I'll show you how cheap IWM options are. Look at how cheap close to in the money options are for IWM. This is contracts. First of all, it has three expiration dates in a week, just like SPY. And look at this. This is for contracts expiring on Monday, which is the coming Monday, right? Which is April 4th. 207, which is literally one contract away from being in the money, is just $111. So if you're trading with a small account, IWM is the way to go. Do keep in mind, the contracts do move a little bit quicker on IWM, so definitely keep your eye on that. Let's see. Your SPY put is screwed? Not necessarily, because even though yes we're having decreasing volume, right? It doesn't mean that there's a possibility of this trend to somewhat continue for a little bit longer, right? But we have to see, because we just have to see. It's all about confirmation. It's not about prediction. Yeah, IWM is a ETF after all, so it's pretty steady, as Joey said over here. SPY is also believed to be in a correction, downtrend. Exciting to be exiting. I can't speak today. Exiting to be bullish. Also do them a favor and give a quick talk about VPR, VPVR, since we were talking about volume. I did before. X Club. I don't think you were on the live then, but I did. But yeah, as he was saying right here, market's always due for a correction. This is just a huge correction, obviously. When the pandemic hit, we had the correction, right? We had our this huge dump, but then we were followed by so much bullish activity, right? Like, you guys remember, we just kept on. Look at this. Look how many days consecutively we've closed green, right? So that's why it's just it's considered a pullback, right? So it's just a pullback, a big pullback, of course, but we can eventually see a continuation of a bull trend, because it is the market overall. Market's not going to stay down. Let's see. The IWM is definitely cheaper. It's also kind of fun to trade out at IWM, to be honest with you. But volume and open interest are a lot less than SPY, so maybe we should look out for that. Yes. So as Cheesy Spy said, as I said, the contracts for IWM actually move a lot quicker, and the reason is that there is less volume on those contracts. So that means that the more people buy all of a sudden out of nowhere, the quickly these price can be manipulated. So that's why you just wanna look out for that, right? So don't chase the trade. Never chase a trade. A good rule of thumb is, if the trade, let's say an analyst puts out an alert, if it's 5% past what they said, don't even bother entering. It's just too risky. Have I talked to him about a wick-off strategy? Well, if you actually looked at the previous lives, we went to supply and demand zones. We had two parts to it. We went to our price and volume analysis, and basically these are all things I learned from the wick-off strategy, and I also implemented my own strategy into this. So I am kind of simplifying the wick-off strategy and explaining it a better way. So yeah, awesome session. Thanks for everything. No need to say thanks at all. Hope I benefited you, us. But yeah, it's obviously a pleasure doing this for you guys. Do you guys have any questions? Again, feel free to ask anything. I know it's 2:34, so you guys probably have like barely any brain cells either to ask any questions. But I'll give you guys a few minutes to ask any questions. If not, we could just end the live, to be honest with you. The questions could be about anything based on volume analysis and whatever it is, or even supply and demand zones. I could look to answer it briefly. I posted the link to get the Thinkorswim indicator on Thinkorswim through announcements, so you could just feel free to look at that. But yeah, April's a new month. Fortunately, last month was not one of my greatest months. I had an 85% win rate, following an amazing month in February with a 98% win rate. So, April, learning from my mistakes. I'm definitely gonna look to do better than I did in March. Not saying I did terrible in March, but compared to what I did in the past months, right? I did do bad in March, but overall, 2022, I've had a 91% win rate, which is pretty decent. We've total made 11,100% profit, right? Which is, again, amazing. This is based off of just having one contract. So, if you guys see my trades, you can see that, even small profits, right? Like 10% profits or 15%, 20%, these all add up. And these all add up and they all end up making a big number in the end of the day. I've said this a million times. There's this beautiful website called Daily Compound Interest. Let's say you start off with $500 and you grow your portfolio 3% each day, right? And since there's 252 trading days in a year, of course we're not including weekends, and let's say you don't withdraw any money from that account and you put an extra $25 in that account every month, this is what you can grow $500 into within a year. And I'm not even kidding you. I mean, no, this is what you can grow it into. Of course, this is not including taxes and commissions if your platform does charge commissions. And of course, it doesn't mean you're going to absolutely reach this point, but it's achievable or it's close to achievable, right? The hardest thing that a lot of you guys and members do is you don't realize that just taking 10% profits is actually the only thing you need to do to, actually secure a gateway into having a portfolio of this kind of size, right? And then, of course, setting stop losses no bigger than 20% or 30%, right? So, proper risk management and emotion control is some of the most important things next to learning all of these, like, volume analysis, supply and demand zones, all this trading stuff, right? That's, of course, you need to know, but all of that stuff is absolutely useless if you don't know risk management. So, definitely know that. Isn't multiple to get cheaper contracts or one or two expensive contracts? So obviously you can look at it like this. The more expensive a contract is, that means it's closer to being in the money. And the closer you are to being in the money, the less risky the getting into a contract is. But also, the deeper in the money the contract is, the less volume that contract will have, which means that it's going to be harder to exit or trade or enter that contract. So it basically depends on your risk management and your portfolio. If you have a small account, then obviously what you would want to do is enter in small contracts. But the main thing to always look at is just do not enter more than 10% of your portfolio in every trade. If you're doing more than 10% in each trade, you're doing something wrong. If you have such a small account and you can't do anything with 10%, right, then you just have to honestly increase your account size. I'm not saying you cannot do it with $100. Obviously you can, but you have to break the rule of only using 10% of your portfolio each trade, which means that you're putting a lot more risk onto your account. So do keep that in mind, right? But if you want to trade your account safely, always only put 10% or less of your portfolio in each trade. And I promise you everything will work fine after that. But do keep in mind, if you use platforms like Thinkorswim, the more contracts you buy, the more commission you have to pay, right? So keep that in mind as well. What advice and tips do you have with scaling out of contracts? Number one tip, first of all, start scaling at 5% or 10% profits. Number 2, actually set the limit orders for the scales or the trims beforehand. Don't look to trim at the time when the option reaches the price you want to trim at. Look to set the trims beforehand so you have a higher chance of your contracts actually selling at the trim price instead of missing the trim price and the contracts going from green to red. And also, once you keep on scaling out or once you keep on trimming your contracts, raise your SL, raise your stop loss. Don't just keep it down below break even or keep it at break even. Look to secure more profits, right? So that's basically the best advice I could give for it. Yeah, I love the frog emoji. Oh, thanks. Definitely hope it helped. Do you guys have any other questions? It would have been a better life if I did this earlier. So I'm so sorry for keeping you guys up. But this is recorded, as you can see right here. So I will be posting the recording in the coming time. We did a Q&A, I think like a week ago or 2 weeks ago. I'll be posting that tomorrow. Also, one of my friend analysts named Miscellaneous. He did a live a while back on trading futures. Unfortunately, his recording got corrupted, but he did re-record a live. He re-recorded himself like explaining the topics. So I'll post that live or that recording within this week or the coming week. So 2 uploads, and then I'll try uploading this one soon as well. But if there's no questions, I'll give it another 2 minutes for questions. If nothing, then I'm gonna say good night. Cause it is pretty late. It is. Oops, I did not mean to open up Weeble. Let's close that. Oh, by the way, if you guys are looking for a good phone, why the heck am I talking about phones? But if you guys want to look for a good phone, search up this phone. Literally has the best stats, and I can afford any phone out there, but this is the phone I ended up going with. It came out like 3 years ago. It came out in 2019, and it still has some of the best specs I've ever seen on any phone. Has 12 gigabytes of RAM. It's 6.67 inches, right? And it's literally all screen. And it has a freaking pop-up camera. Could you even believe that? I'll show it to you guys. I know this has nothing to do with the live, but I'll show you guys. I shall show you guys, because I'm like literally a fanboy for this phone. First of all, look at the back. It's absolutely beautiful, right? It's like, it changes colors in the sunlight, and it's all screen too. The selfie camera is actually a pop-up camera, so it's not even on the screen. But yeah, it pops up like this. It's pretty neat. Like, even if you were to drop your phone, the selfie camera's out, the camera retracts back into itself. So I know like the current price right now is not that expensive. Obviously, it's a little bit expensive. But you could find like refurbished ones for $300 or $600. And that's insanely cheap for this good of a phone. Basically, if you don't know what RAM means, it's basically like the memory a phone uses to run tasks. And the more RAM you have, it kind of gives a longer term for your phone, right? Or a longer lifetime for your phone. So definitely look at this phone if you guys are looking for phones. You have no idea why I brought this up, so definitely ignore this. But for Weeble, do I have a limit order open for sell at a stop loss or sell? No, you don't sell at a stop loss. You just set a. If you're talking about trims or exiting, you just look to set a sell limit order. That's it. That's all. I'm a college student. The only family with me is my wife. Oh, and thank you. Yeah, my my win rate has been above a 92% every year for the past 6 years. For the past 3 years, I think it's been 96%. So hopefully we could get the win rate back up for this year, so we don't bring that win rate down. And you have the 9 Pro. I'm proud of you. OnePlus is literally the best company out there. No, how do I have both of them open at the same time? That I unfortunately do not know. You would have to ask someone else, or I'll get the answer to you. Um, yeah, because I don't use Weeble. I use Thinkorswim, so I'll be able to answer that question for Thinkorswim, but I'm not exactly sure on Weeble. Yeah, I'm so sorry I couldn't bring that answer to you guys. If I did use it, I would know the answer. So if anyone else knows how to set a selling order and sell a stop loss order at the same time. So basically, what that means is setting a stop loss and a take profit. If that's available, definitely let these guys know, and also ping me as well because I'm curious about that. So yeah, it's such a struggle because if I have a stop loss and want to sell, I have to cancel stop loss. Yeah, I know what you're saying. That's why again I have Thinkorswim as the best platform, in my opinion. But yeah, wow, that was the worst voice crack I've ever heard. We was a stop loss TP futures on options, I think, but it's bad if you're attempting to trim. Uh, Dual box. I know this is totally out of what I should ask of you, but if you could send a screenshot of where we could find that or where they can find that, that would be amazing. Because I personally don't use Weeble, so. And if you guys don't mind putting in live ideas over here in this channel called Live Ideas, I could go over any topics you guys want, in future lives. So. Again, I'll give you guys just a minute for questions. Can't believe most of you stayed on. I see a lot of faces here that have been here a while. Like Salahan. Sorry if I said your name wrong. Nader is literally on every single live, so that's pretty cool. What did I go over in this live stream? I basically went over questions members had, and also I went over volume analysis. But this live stream is recorded. Hopefully the recording goes well, and I'll post the recording in some time, in a few days or a week. Oh, so stop limit? That's what that is? Are you sure? I thought, okay. When I saw this, I didn't obviously use it because I don't use Weeble, but when I saw stop limit, I thought that meant like once the price reaches the stop price, it triggers a limit price. Right? And it sells, but I'm not sure. That's like, yeah, so that's technically not what they're saying. It's kind of stupid. Yeah, Weeble has to get that, updated, because that's kind of stupid. What's the easiest way to navigate around the 3-day rule on a small account? Easiest way, since obviously I know that you're talking about Robinhood, get out of Robinhood. Get out of Robinhood and use, since you have a small account, use Weeble. Not sure if you covered this, but how do you decide a strike price to buy? This is a very good question. I did go over this in previous lives, but I've not seen you in my previous lives, so I'll go over it very quickly. Basically, you want to always enter a contract with high volume, right? The logic behind this is, if a contract has high volume, that means it's easy to enter the trade and also easy to exit trade. So for example, if you entered at $50 and the option went up to $70 and you're trying to sell, if you have a high volume contract, that means there's obviously going to be most likely sellers willing to buy like at the price that you're trying to sell at, right? Of course, if the price is if the price that you're trying to sell at is reasonable. But if you choose a contract that has low volume and low open interest, there's less chance. Let's say you're again in the same situation, the contract goes from 50 to 70, there's less chance that your contract will get filled to sell, right? When you're trying to sell your contract to cap your profits or to secure your profits, there's less chance of your contracts to fill. Now, let's say you're not able to see your volume or open interest when it comes to contracts. How else would you determine which contract is good to get into? Well, it's very simple. The number one thing to remember is you want to find the sweet spot when it comes to options. So contracts, the deeper you go into the money, the contracts have less volume, right? And the farther you go, deeper you go out of the money, or farther you go out of the money, right, the less volume there will be. So you want to find the sweet spot, which is basically like not too far of the money, but not too deep into the money, right? Not too deep into the money. And then using that, what you want to do is you want to first look for any contract that ends with 0. Because any contracts that end with 0 usually have more volume compared to contracts that end with like an odd number, right? Or an even number even. Or like a 2 or a 4 or 6 or an 8. Contracts that end with 0 usually have the most volume. So let's say I was doing a trade, right? And this is how the market was. The market was live right now. The contract I would go for is this 450 put right here. If I was looking to get into puts, right? Because it's in the sweet spot, right? It's not too far out of the money. It's not too deep in the money, right? It's not even in the money, so that's good, right? So this is where you would want to get. You would get this 450 contract because this would most likely have the most volume compared to like the 449 or 451, right? Also, the second contract you could look at, right? The second number is contracts that end with 5, right? And then the next one would be 2. So you also want to look at 0 first. If there's no 0 nearby, then you look at 5. But yeah, if you look at the calls right here, I wouldn't enter into these 460 calls, right? Because this is way too far out of the money. So what's the next contract? What's the next strike I would look at? I look at the 455 strike, right? Because it ends with 5, right? Which is the second most strike price with the second most volume. And it's not too far of the money, and it's not deep in the money either. So this is definitely a good contract. So hopefully that answers your question. Why are too deep in the money contracts ever a bad contract though? Is there a reason? No, I'm not saying that these contracts are bad. I'm just saying that, okay, look at this. Look at you guys, right? This is nothing in a bad sense. Like, look, how many of you guys have big portfolios, right? How many of you guys can actually enter in these trades? I'm pretty sure most of you cannot risk 10% of your portfolio cannot equate. Okay, wow, let me rephrase this. Most of you guys, like in an honest sense, right? This is nothing to put you guys down, but most of you guys do not have a portfolio where 10% would equate to like $1,000 to $2,000, right? So this obviously means there's a lot of people like you guys, right? And you guys, there's not going to be a lot of orders for these deep in the money contracts. So that means there's going to be low volume on these contracts. So therefore, if you're trying to day trade, deep in the money contracts don't really make sense for you as a day trader because it's going to be harder for you to get out of these contracts. And also it just moves more volatile and less logically than fairly valued high volume contracts would. Hopefully that makes sense, because that's actually the best answer I could give to that question. No, just because it's more expensive. Thank you for asking that question. So just because it's more expensive does not mean it's going to move quicker. Of course, that's the case when it comes to contracts that are close to being in the money, right? Now, obviously, these contracts are going to move more, but just because it's moving doesn't mean that you're going to easily be able to get out of the trade. You could get into this trade, right? You could get into this, for example, this 450 call, right? And the stock and SPY just goes up, and this contract goes from 1254 all the way to 1500. It's going to be very hard to get out of the contract in the first place, right? And what if, like, right after it reaches 1500, SPY starts dumping? The contract of the price of this contract will dump so bad that you will literally end up with a loss. That is how bad low volume, high volatility contracts are. So that's why you don't want to go for in the money contracts, right? Because it has low volume. Now, just because a contract's more expensive, right, doesn't mean that it'll move less. It will obviously move more, but it doesn't matter if it moves more. You don't want to look at it if a contract moves less or more. You want to look at percent value, not numerical value, whatever you want to say, right? So look at percent value. Yeah, I mean, you don't need to afford deep in the money contracts. There's always stocks that have cheap contracts. SPY is one of them. IWM is a very good option. I think AMD has cheap options, right? Yeah, AMD has cheap options last time I remember. Yeah, AMD has fairly cheap options. So there's always options. There's always option chains out there, right? So has there been any other meeting that goes over how to make your own trades, like how to find a stock, analyze it, find a good contract to buy? Because I'm looking to try to find how to start doing my own trades so I don't have to only just go off with alerts. So that's perfectly good. So what I would recommend, so one second. What I would recommend is you head to our YouTube channel, right? Because this is where our recorded live sessions are. First, watch this video right here, which is called How to Be Profitable in the Stock Market. This is a live session we had a few weeks back by a fellow analyst of mine named Neocentric. His name is Hayden. He went over risk management, and he briefly went over like the Bollinger Band strategy that he took off of me, right? Like he learned off of me and learned off of my charts. So first watch this video, then watch the supply and demand videos, and then rewatch this video. That will basically tell you what you need. But yeah, it's if you just get good risk management down, then it's not like you need to find a stock, because you don't need to find a stock. Just all you need to do is just look at blue chip stocks or big cap stocks, right? So that's all you need to look at. You don't need to look at specific stocks and stuff like that. How to analyze it? Yeah, I analyzing like trends and stuff like that, and like, you know, like a descending triangle or head and shoulders. I still have to make a live session about patterns and stuff like that, so I'll do that in the future. But you could definitely still look at this live we had. These two lives about supply and demand zones. This video is about how to plot them and briefly goes over how to trade them. While this one is strictly about how to trade supply and demand zones. So watch these two videos too. Will trading get you girls? The only thing that could get you girls is you, not money. So Joey, be quiet. Because I've been doing the old strat and I got none. Well, trading didn't get me my wife, and I'm doing very well with her, so there's your advice. Do you recommend only day trading, one ticker at a time? That's a very good question. I would say it's better to stick to 1 to 3 tickers, right? Because why do you need, if you understand 1 to 3 stocks, right? Why do you need to go to other stocks? If you do very well with them, just stick to them, right? So just trade or analyze 1 to 3 stocks. That's basically the best you could do for yourself. Because if you have too much to look at, then you're just gonna chase trades and you're just gonna overanalyze and hesitate, and that leads to errors. 1 second, let me just take a sip of water. My throat is absolutely dry. So 25% is awfully a lot. I would say the most you should ever most you should ever put into a trade is 20%, but that's obviously still pushing it. The safe limit is always 10% and less. Because let's say you have a bad trade, right? Let's say the market opens and you do a foolish trade, or you maybe even had a good trade, right? You had the good TA and everything, but news came out, or just the market just went against what you looked at. You still have 90% of your portfolio theoretically to trade the rest of the day. Now that does not mean you use 100% of your portfolio throughout the day, right? It doesn't mean that you need to do basically 10 trades to use up your 100% of your portfolio. No, if you're green for the day, if you're up even 1% portfolio growth, you can literally end the day. It's fine. Look to grow your account versus getting rich. You're not trying to get rich, because if you have the mentality of getting rich, you're going to get nowhere in the end. So
Nigga, the cops outside. Lock up the house.
yeah, definitely start doing for 10%. I know it's going to seem small first, but who cares? You're looking to grow your account. You're looking to reach a good stage, right? Like if we go back to this example, let's even do passive numbers. Let's do 1%. Let's say we start off with $1,000. Let's say we withdraw some money from time to time. You put $50 every month, right? For a year, you could go from $1,000 to $4,000. You must be like, oh wait, that's only $3,000. Who cares? You grew your account 308%, right? And let's say you take this money, 4,300. The next year starts. You do the same number, right? Same values. You take that account from 4,000 now to 16,000. Now it's year 2, right? Now you're on to year 3. You put that in here. You start off. Look at it. You reach 64,000 in 3 years. By the end of 3 years. Let's say you want to take 4 years, right? You're going on to 4 years. You're being a good trader. Look at this. By 4 years' time, you could get to 6 figures. Even if you don't reach 244,000, you could reach $100,000. It's so easy to reach. You don't understand that. Yes, of course, taxes and commissions and bad market days will obviously hinder your progress or slow down your progress, but it does not matter. It does not matter if you make, if 10% of your if you keep on taking profits at 10%, right? And even if that 10% is only $2, you're still making 10%. That's all that matters, right? Percent is what matters. Percent is what matters, never the money. This is always what you want to be looking at. Percent growth, percent profit, percent portfolio growth, percent loss. It's never this number. It's never numbers. It's never $10 profit, $10 loss. It's never that. Look at this. In 4 years' time, we reached here. Right? We could start off. We could go back to $1,000. We could say we do it over 5 years, which is what? How much is I can't do math right now. That's 252, 1,260 days, right? Look at this, 5 years. 5 years. 5 years you could take $1,000 close to, again, it's not always guaranteed, but close to 7 figures, not including, of course, commissions and taxes. So please take profits. It's so easy to do. Also, what is the wheel strategy? That's a strategy that's theoretically you cannot lose on, but it's only good for long term or big accounts. What's the link to this website? I posted on the announcement tab a bunch of times, but I'll post the announcements. You know what? Let me actually create a let's see. Let me create a channel for links so that you guys can actually refer to it and it won't get lost. Should have done this a long time ago, so sorry. But so for the compound interest calculator, right? I just posted the link right now. For the TOS, let me just put thinkorswim buying versus selling indicator. You can use this link. Oops, wrong link. Yeah, let me know if there's any other links you guys want me to put there. So I have around $850. Should I not be entering into contracts that cost me $100 or more because that's around 15% of my portfolio? Okay, so this goes more into how to assess risk management for your portfolio. Obviously, risk management is different for everyone. The way you calculate your risk management is based on a few factors. You look at your age, right? Because that matters. Because if you're younger, then obviously that means there's less likely of a chance you actually have a stable income on the side, right? Why is that important? Well, if you lose, God forbid, that $850 you put, if you're a kid, right, you know, you're less likely able to replenish your trading account. So that means you want to trade with much more cautiousness, right? Versus an older person who might be like 30, right, or 35 or 25, and they have a job and everything and they have a stable income, then you know you can actually have a higher risk tolerance because you can afford to somewhat lose that money, worst case, right? So then like 15% of your portfolio in each trade wouldn't be too much of a bad thing. So that's a question you want to ask yourself. You know, what age are you? Do you have income on the side? If you were to, God forbid, lose this money, right? Lose what it's in your trading account, or 15% of your trading account, or even think if you lose 50% of your trading account, does that impact you financially? If it does not, then you can easily assess what risk management you can have. But the greatest rule of thumb is 10% of your portfolio in each trade, right? 20% stop loss, and yeah, that's literally what I've been saying. So that's basically the sweet spot. That's what you should say. So should you not be entering contracts that cost $100 for $850 portfolio? Hopefully with what I said, you can be able to answer that question. And is the wheel strategy an easier or hard one? Gonna watch the video, but just want to know before. After you watch my video, it's so easy. It's literally so easy. All it requires is not even 3 to 5 minutes of technical analysis on a chart, like one time per week. I'm not even kidding you. And you can literally not net a loss. You cannot net a loss on this. So yeah. How much time? again. Just after you watch the video, you literally won't have any questions. But I was saying that for the technical analysis part, it literally, you need to do technical analysis for maybe like 2 to 5 minutes once per week, and you'll be fine. And you literally won't net a loss if you, of course, follow the rules that I put in that video. But do keep in mind that's for big accounts and growth, long-term or growth accounts. If you have growth and long-term accounts, you literally are losing out on money if you're not implementing the real strategy. So please take a look at that, because that's only going to help you guys. Yeah, $100 unfortunately is not enough at all, unfortunately. It has to be 5 figures or above, so like $1,000 or above. And then setting a target price isn't specific, it just varies though trades, right? Well, setting a target price, you don't want to really set a target price, you want to set target percentages. And those would be like 5% profit or 10% profit. So that's what you want to look at. And obviously, the more confident you are in a trade, I guess you can raise the percentage, but obviously know that the higher the percentage you raise your profit to, right, your profit take to, the more risk you have of that contract not hitting that that limit. So you gotta mow some lawns. Yeah, I mean, it's a perfect time right now. The weather's getting better, so. Oh shoot, my bad, I haven't checked the main chat. Oh, never mind. Oh yeah, with the whole Will Smith thing, I thought that was fake when I first saw it. Then my girl was like, "No, that's not fake at all." That was funny. I know I forgot what his name was, but he did take it like a champ. That was very professional of him, to be honest. He played it off too. That's why I thought it was fake. Like the way he played it off, I thought it was so fake. Like it didn't seem like it even hurt him. So I was like, oh, it was fake. So that's a very good question. What percent do you recommend scaling out? Your first trim or your first scaling should always be the majority of your position. So that means 50% or 60%. I usually do 50% or 60% on my first trim or scale. Why do you ask, right? Well, because then that's higher of a chance that even if your contracts, like, right, even if if the remaining contracts go red, right, or hit, or you get out at break even, you still end up with most of your position being profitable. That's why. Yeah. Grow that account and the woman will come. That's not true all the time. But I cannot say that that's not true, because there's some very shallow people out there. And just so you know, volume analysis does not really work that well on Forex and crypto, because yeah, it does not work well on crypto and Forex, because it's kind of like based on I mean, it kind of does, but it doesn't work as well as it does on what's it called? Well, I'm thinking of the stock market. Wow, I'm stupid. Probably gonna put this in live ideas, but wondering what you think of it. A live stream where you can shoot your whole morning goals, how trading wise, like how you find setups, what trades to enter, etc. Yeah, no, I definitely would do that. I'll definitely do a live trading. Probably not on this server, because if I do it, then server owners are gonna be like, "What the heck are you doing? You're trying to steal our server members with live trading." So I'll probably send out like a Zoom link one day, and we could do it from there. Yeah. Yeah, absolutely don't mind telling you guys what I think. Stuff like that. Maybe I can even record it, honestly. Oh, wait, I could even do a YouTube live. Totally forgot about that. I could do that. But it's very hard for me to do that, keep in mind, because I am a college student. So maybe I could try this Monday, who knows? Maybe. How do you read this? Okay. Day trade, obviously, you know what day trade means. That means you're opening and closing a position within the day itself of the market open and market close. BTO means buy to open. That means you're buying a contract to get into the position. AMD is the ticker, right? 4/01 is the expiration date of the contract. 116 stands for the strike price of the contract. P stands for put, so that could either be put or there could be a C there for call, right? So it could be a P or C. In this case, it's a put. And the at percent or the at sign with the 0.89 is basically the price that he entered in the contract. So there's BTO and there's STO. STO is actually more into the wheel strategy, if you ever look into that. BTO means buy to open, while selling means sell to open, because you can actually also sell options as well. You don't have to only buy options; you could sell options. Because think about it, when you're buying an option, you're actually buying that option off of another trader who's selling it, right? And that trader is selling that contract. So that's how you can enter a position while selling a contract. So if you guys have realized, when you buy a contract, you make profit when the contract value increases, but when you sell a contract, you profit when the value of the contract decreases. Because obviously, if you're selling, right? If you're selling to open, that means you obviously, when you sell to open, you get a credit, right? Okay, this is I'll try explain this very briefly. I don't want to get this too deep into it. Look more into this video here, the basics of the wheel strategy, to know what selling contracts is. But let's say we look at SPY over here. Let's say if I sold this 450 put, I would basically be receiving a credit of 253. So that means 253 would be deposited into my buying power. I would have to give up a collateral of the strike price times 100. So in this case, that would be 450 times 100, which is $45,000. So I give up $45,000 collateral for to receive a credit of $253. This collateral stays in the market, or is given to the platform that you're on right now. So it's that yeah. So the collateral stays with them. And obviously, since we're receiving a credit, right, we receive a credit of $253. To close this position, you have to buy to close, right, since we sell to open. So you would obviously want the contract value to decrease, right? Because if you want to buy back into this position to close the position, you don't want to pay more than what you received in the beginning. So you would want to buy back at a lower price. So when you sell options, you profit when the value decreases, versus when you buy options, you profit when the value of the contract increases. And then when you close your position, right, once you sell to open a position, and once you buy to close a position, you receive the collateral back that you gave up in the beginning. What if it hits expiration date if I sell before? Never hold a contract till expiration. Too risky and not even worth it. And what's the best thing to trade options on for iPhone? Webull and Thinkorswim. So either Webull or Thinkorswim. And if you want Thinkorswim, you could use my referral link. Just text me in my DMs. Regular stocks, Webull and Thinkorswim. Both are perfectly fine. But do not use Robinhood if you're planning to day trade. New to this whole group, but just wondering, do you mainly have to alert every trim? How much of a hassle is it to update alerts? Oh my goodness, you have no idea. Especially with an analyst like me. I have a very huge portfolio. I have an 8-figure portfolio. So I trim a lot. And because of that, I need to constantly update when I trim. So that means every time I enter, I need to enter very quickly. I need to set a stop loss and I need to type out an alert to enter. Then when I need to set a trim, set an alert for that. Then I need to alert every single time the trim gets filled. So it is a hassle because it kind of takes away. A lot of times I've actually hurt my own positions because of alerting. So it's kind of hectic. Yeah, actually, Raker or whatever your name is, you could actually DM Shmeez. No need for me to send me my link. He can easily send his link. I think you can get like 5 free stocks or 2 free stocks right now or something like that. So, yeah. I heard you turn 1 million into 50 million in 2 months. Is that true? Yes, that is true. It was more than that, but it's not something. I'm a Muslim. In Islam, there's a thing called the bad eye, right? And what that means is if you show off greatness or something good that happened to you, there's obviously some people who admire it, but there's also going to be some people who look at it in a bad way, and that could obviously hurt you in the long run. So that's why I just try to not go into deep specific details. And yes, I'm currently in college. I'm 21 years old, so I'm in my 3rd year of college in Hofstra University in Long Island. I want to become a radiologist after I graduate this college and I go to medical school. I complete my residency. I want to become a radiologist. So yeah. I've noticed and now analysts put out alerts that are a bit longer time frame, even if some minutes long. I suppose. I'm confused by this question. What do you mean? Could you rephrase this if you don't mind? I'm just a bit confused. Is being a radiologist what I always want to be? Not at all. I always wanted to be a hedge fund trader, but I'm Indian. I love my parents, but they obviously want me to either go into medicine or they wanted me to go into computer science. I was like, you know what? I make more money in medicine, right? So I went to medicine. A lot of people ask me why I go to college when I make a lot trading. Trading is never going to be completely stable in the long run, right? There's always going to be bad months, there's always going to be bad days, versus having a job, right? And especially a good paying, stable job that has a secured, like future. It will always give you a stable income, so that's what's important. Oh, so you're talking about like fast alerts? Yeah, so what I try to do is sometimes price moves quick once you alert it. So what I try to do, if you guys actually look at your alerts, my alerts actually show it too. And just keep in mind, I'm going to my own analytics server, which means this is where I just message my bot. So I'm not selling any memberships here. In case any server members are on here, I promise you, I'm not showing any member right now, any paid server or promoting any server right now. But if you actually see right here, most of the times I do my best to tell which puts or contracts I'm looking at, so you can have an eye on it before I send out like the buy trigger, right? So yeah. You could buy that hospital? No. You can't buy a hospital. It's like billions of dollars. I'm like the radiologist doctor, not the nurse. Which means I had to actually analyze the X-rays and stuff like that. And it's not just bones; you look at organs, stuff like that, as well. There's nurses that operate the X-ray machines and stuff like that, and they also do a little bit of analyzing. And then there's like doctors who are radiologists that dive deep into analyzing and do more emphasis on figuring out the problem. Real estate is a very lucrative field to go in, but you have to make sure you know your stuff, because if you don't know your stuff, you can literally not have stable income from that. Real estate is just basically like the stock market. Yeah, Robinhood will kill you. Please listen to this guy. If you're doing day trading, then yeah. But if you guys don't have any further questions, do you guys have any questions? I'll give you a minute. Oh my goodness, it's been 2 hours. Yeah, I'll give you guys a minute to yeah, I need to sleep. Actually, no, I can't sleep because I have to I had to stay up till 4 o'clock because of Ramadan. Yeah, I'm fasting. Actually, no, I should sleep. I should sleep till 4, whatever the time is. Because why not get some sleep? It's 1. Yeah, it's later for me. Do I do these meetings often as... Well, I'm a college student, as I said, so I try to do my best. If I can't do it, I have other analysts come on and do it as well. I don't know if you guys heard, but Joey was on here a bit ago. He's a crypto analyst, so he's gonna come on in some time to do a live session. So yeah. Ramadan Kareem to you, brother. No, it's awesome being on here with you guys. I hope I helped you out. Remember, knowledge is the most valuable currency. Not even money can beat it. So, because a person with $1 million who knows nothing versus a person who just has $1,000 who knows everything about the stock market, the person with $1,000 would be much more successful than the person with $1 million who knows nothing. So. Yeah, definitely soak it up. Please definitely look at the YouTube channel if you haven't already. The link is also in live recordings if you guys want to look at past recordings. I'll be posting whatever recorded sessions we've had so far. I think there's 3 I still have to post, so yep. Yeah, man, but alright. If that's all, pleasure being on with you guys. Hope the volume analysis helped you out. Please, I'll actually post the slides tomorrow as well. So please rewatch this video if you didn't get volume analysis as well, because it's highly important and very easy to use if you use it properly. So. Alright, good night, guys. Sleep well. See you guys tomorrow or another day. Good night.